Hello friends, in the series on income tax cases today we will discuss a different type of issue which came before Honorable Hyderabad ITAT-B bench, and the issue was not regarding the amount of addition. The issue was regarding the head under which the addition is to be made. In the present case, the issue before the tribunal was that if the assessee has received some cash in respect of the sale of the property which the assessee has not shown as part of the sale consideration, and afterwards the revenue came to the knowledge that the assessee has shown his sale consideration at a lesser figure. So whether this amount is to be taxed under section 69A as an explained money, or the assessee has to pay the amount of capital gain on the part of that income which the assessee has not shown as part of the sale consideration. This issue has been decided by Honorable Hyderabad ITAT-B bench in the case of Tejal Kaushik Maheshri versus Assistant Commissioner of Income Tax Central, and this case is reported at 187 taxman.com 861, and the date of the judgment is 17th June 2026. In the present case, the assessee has sold a property, the assessee has filed the return of income, and after that the revenue came to knowledge through a search on some person that the agreement to sale was there, for which the consideration was shown as 50 lakh, but the assessee has shown the consideration as 25 lakh. The notice was sent, the assessment was completed, there was no doubt, and it was established that the assessee has received the payment above than which was shown in the return of income. So there was no dispute regarding the amount of the addition, but the assessing officer made the addition under section 69A as unexplained money for the amount which the assessee has not shown as part of the sale consideration. The assessee was saying that since it is a part of the sale consideration, so on that amount which the assessee has not shown, the tax on that should be calculated as per the capital gain which is applicable to the assessee. But the assessing officer said that since the assessee has not shown that amount in the return of income, so that is taxable under section 69A. The CIT appeal also upheld the view of the assessing officer, and when the matter came before the tribunal said that there is no doubt in the present case that the amount which has been received by the assessee and which is the alleged amount, that is part of the sale agreement. So if the assessee has already, or if the assessee would have shown that amount, that should have become the part of the sale consideration for calculating the capital gain of the assessee. So it doesn't matter that the revenue came to know about this less consideration part at a later stage. So even in that case also, that 25 lakh extra amount should be clubbed with the sale consideration and the capital gain should be calculated afresh. The issue was not regarding the amount of the addition, but the issue was that whether the cash received by the assessee in regard to the sale consideration is to be calculated as a capital gain by including that amount as in the sale consideration, or the section 69A will be applicable. For that, the tribunal said that 69A is applicable only in the cases when there is some amount found as unexplained money, bullion, jewelry, for which the assessee is not able to give any explanation, or the explanation given by the assessee is not satisfactory. So this was not the case in the present case. There was no doubt about the amount, there was no doubt about the nature of the income which the assessee has received, and the nature of the income was in the present case was that it was part of the sale consideration, and the AO was directed to calculate the capital gain of the assessee accordingly. Friends, this case is important because although the addition has been made into the income of the assessee, but the assessee got a big relief, because depending upon the nature of the capital gain, the assessee will give the capital gain on that. But if the income is taxed under section 69A, that is a huge blow to the assessee, because the rate is very high, and even then surcharge nearly it comes about 78%. So it was decided by the tribunal that the capital gain will be calculated on that amount which is part of the sale consideration and which has not been shown by the assessee. At the end of this video, once again I am repeating the name of the case. The name of the case is Tejal Kaushik Maheshwari versus Assistant Commissioner of Income Tax Central, and this case is reported in 187 taxman.com 861, and the matter has been decided by Honorable Hyderabad ITAT B bench on 17th June 2026. Thank you, friends.